Hi, I'm Jeff Bast from Bast Amron, and this is the Practice Podcast.
Hi, I'm Brett Amron from Bast Amron. Today our topic is helping small businesses navigate the current crisis and the length of this crisis that, quite honestly, I don't think anybody at the beginning anticipated. And so I trust that a lot of you out there are having clients come to you, or if you're small business owners yourselves, saying, hey, I barely weathered the first round of shutdowns. And now that the virus is continuing on, is getting worse in a lot of areas, you see a lot of states and cities that are rolling back reopening plans, and there's a contemplation of shutdowns in places. And so that's a lot to take for small businesses that were teetering and having trouble anyway. PPP is starting to run out, or they may have already run out of their PPP proceeds. So what's a small business to do? How can they navigate? And so today I think we're going to try to come up with some things to think about, to advise your clients on, to just kind of help try to do the best they can to navigate and see what's the best option for them.
Yeah, I think that's a great topic, Brett, and we continue to get more and more calls, and not only by the small business owners, but the lawyers that represent them. So if you're a lawyer, non-bankruptcy lawyer, who's representing a business, a small business that is struggling through this crisis, and they're really just unsure about how to approach it, we sort of view this problem as having 5 primary steps. First is assess your resources, assessing and preserving your resources. Let me run through them, and we can talk about each one by one. Assess and preserve your resources. Prioritize the obligations, so let's prioritize creditors. Negotiate forbearance. Consider the objectives, and these are not necessarily in order. Consider the objectives and options, and finally consult with professionals. And so if we look at the first one, the way I see the first one is assessing and preserving your resources. So what are the resources of a company? Their assets, cash, accounts receivable, employees. And so how do they, first is determine what do you have and what do you expect?
Yeah. And I would say, normally, when we start planning budgets, we look, a number of months or even years out. Given the current environment, I don't think, candidly, you can go more than 30 days, given how quickly things are changing and just the chaos that right. seems to be raining down everywhere, and how things change so quickly. But even in that, you've got some places that have equipment, they've got physical inventory, things like that you have to factor in. And it's not just necessarily inventory that is on site already, but if you have orders that are outstanding for goods that are coming in, where are they? Have right. they been manufactured? Have they been put on the boat or on the plane or on the truck? And are they on their way to you? And so those are things that you can lay out in assessing your resources and the assets you have, and then comparing that to the liability. It's almost like creating the budget, right? Right. Is my 30-day budget. This is what I anticipate. Right. And being realistic, I think, is the key.
So in insolvency world, we tend to think in what we call 13-week cash flow budgets. It's a 3-month period. So a 13-week budget will show what the beginning cash is, what revenues are expected, less the expenses, week by week. As Brett indicated, it's kind of tough to, as you said, it's kind of tough to budget out 13 weeks in this climate. But you mentioned assets in different places. I think it's a good time to be thinking as a business owner about assets that are at other locations. Yep. For purposes of, that business may fail. And so we're seeing this a lot with a lot of consignment vendors, people who consign their products to another business, another retailer, for example. If that retailer fails or ends up in a bankruptcy and you have consigned product there are certain requirements under each state has their own applicable consignment laws. You have to record UCCs. They have to be properly, segregated or otherwise noticed. And so there's lots of requirements. You need to be thinking about all those obligations and all those categories of assets in different locations. You know, in terms of cash and employees, we have PPP loans that are coming in now. Do you use the PPP loans to pay your employees to keep them on staff? You know, obviously, I don't mean to be cavalier about employees. These are people in their lives, but they are an important resource. They're an asset of a business. And so if you just terminate your employees, obviously it's a terrible thing to do, and no business owner does that lightly, but those employees are going to look for other work. And so if you start to reopen, you may not have that resource available anymore. And now you're starting to look for new employees. So these are just considerations to think about. The second one I mentioned was prioritizing.
Before we get to the second one, let me just talk on the first one. When we talk about employees, you know, one of the first things that we always ask when we have a small business or business owner in our office, you know, looking for restructuring or insolvency advice is, have you paid employment taxes? Right. Because employment taxes are one where everyone's like, oh, you know, I'll just not pay those, and that's extra cash for me and I'll make it up later. But there's personal liability for that as the business owner, number one. And then we always ask, have you paid any sales tax? Because there's potential personal liability there too. So those are things that you have to include in those line items when you're, you know, factoring that budget and things that have to be paid or should be paid. Health insurance is another one if you do pay health insurance or retirement or things like that. So be realistic, you know, and get that real true assessment over that period of time.
Right. So that's exactly the second category, which is prioritizing creditors. You spoke to it. A lot of liabilities have priorities, but a lot of them are trust fund requirements. So payment of payroll taxes is a perfect example of, you know, that's a creditor that has to get paid. You're basically, a lot of business owners don't realize that when they collect payroll taxes and don't pay them to the IRS, they're collecting that money on behalf of their employees. That money that they don't pay to the IRS is not their own money. They use it for another purpose that is, in some places, in some considerations, theft. Same thing with sales tax. You are collecting, as a business owner, when you collect sales tax, you're collecting it as an agent for the governmental agency, typically the state. So it's a trust fund liability. If you don't pay it, you have violated trust. In some places, there's even criminal liability for that. But as Brett mentioned, there is certainly personal liability. So you have to prioritize the creditors, and that's not an easy thing to do. It's you know, there's so many components to that. You have obviously loan documents that are going to govern. You have state and federal laws that are going to govern. It's important that business owners consult with their professionals about how to prioritize creditors.
Yeah. And, you know, there's always that, as a small business owner, you may have personally guaranteed some of those obligations, whether it be to a bank, to a landlord, on a credit card. And, you know, you sitting there as a business owner thinking, well, okay, if the business fails, the business fails, but now I may be personally on the hook for some of this stuff. Where should the money go? You know, those are always considerations. And, you know, dollars are finite if they are not enough to pay the bills. And so that's why you really have to sit down. If you don't have an accountant or you don't have somebody in-house, you really have to sit down and figure out, you know, what the expenses are and what the obligations are, right? The larger obligations, not just the cash flow, but the larger obligations of the business, and, you know, to whom the money is owed, who is obligated on those debts, and prioritize, as Jeff said. Are there secured creditors who have collateral, whether it be the inventory or the equipment? Are there, you know, the landlord, right? If you default on the landlord and the landlord proceeds, the landlord can assert a landlord's lien and potentially lien up some of the equipment or inventory that is located on site, and that can create, you know, additional issues for you and your business. So, and I know it's tough with employees, like you said. Employees, you know, every small business owner wants to keep their team and their employees and they want to keep them getting paid, and they want to pay if they provide benefits, they want to keep doing that. But I think you have to have a real true assessment and sit down and figure out to whom you owe,
Right.
priority of that, and see if you can make a go of it and see if it works.
Right. And that's exactly, the third criteria in our list was negotiating forbearance. And so when you determine the priority of creditors, and that may be driven by whether they're secured or the size of the obligation or the importance to their business, that's when you pick up the phone and start communicating with them. Extend and reduce as much as you can. Can you extend the payment terms? Can you reduce the obligations? If you've assessed your resources and you know that you have a collective pot of, let's say it's cash, to make it simple, and there's only enough to pay 20 cents on the dollar to all creditors, well, that's at least a starting point. If you start with your largest creditors, then and determine if they're going to allow for some forbearance, then that drives what the options may be. Right. But to Brett, to your point from a minute ago about personal guarantees, a lot of business owners just don't even know, and they haven't looked at their loan documents. They don't have them, and they pick up the phone and they're consulting with us. And our last item in the list is consulting with the professionals. These are great things to determine before you go to consult with your professionals. If you do all these things, then your consultation with the professionals is going to be a lot more effective, because you've determined which debts are personally guaranteed, which ones are secured, what assets you have, what resources you have. So once you've done all those three things, assessing the resources, prioritizing the creditors, negotiating forbearance.
So before you move on, the negotiating the forbearance goes back to a podcast we did previously about communication, right? And communicating with creditors, and the importance of that. And throughout this process, once you get to the point of, assessing your resources, prioritizing your obligations, and then it's, trying to negotiate or discuss forbearance, is really communicating with your creditors to let them know. I mean, you're not alone in this environment. This is not a situation in all likelihood that it's just your business that failed for whatever reason. There's a lot of businesses that are either failing or going through hardship because of the current environment. And so I think to the extent they can be, creditors have been a bit more receptive to working with, the obligors on the debt, if they come to them with a plan, or with an idea, or with some thoughts about, here, this is what I'm trying to do. This is what I would like to do.
Right.
Work with me, not just, hey, I need a break.
Right.
So all these steps will help, I think, in that regard as well.
Yeah, I think a lot of borrowers, particularly tenants in this environment, fail to recognize that their landlord has their own creditors that they're dealing with. So a lot of lessors, commercial lessors, have their own restrictions that they're answering to their own lender, that they can't just agree to waive rent.
Right.
But it's an important conversation to have to determine how much you can get. And which brings us to the next item on the list, which is considering the objectives. And I think a lot of people would say, well, why isn't that the first one? Don't you first consider your objectives? Well, yes, you can think about your objectives. And what we mean by objectives is keeping the business, operating it. Do you sell assets? Do you liquidate? Are you going to try to restructure? Are you just walking away or retooling? Yeah, you should think about those things at the beginning, but you can't really effectively do that until you've done the other steps in this process that we've been talking about. You got to determine what the resources are, what the creditor tolerance is, what the capabilities are, how much forbearance you have, what time kind of considerations you have. Once you have all those considerations in mind, then you can really consider the objectives and think about what you want to try to do with the business.
Yeah, and some of that may be dictated for you, unfortunately, with local, state and local mandates, and just sort of the environment of where you're located and what's going on there. So, those are all things that, we as restructuring advisors don't ever really didn't have to deal with too much.
Right.
But today in this environment, that's something you have to maintain. So it's not just the financial aspect of it, it's logistics too, and keeping your your ear to the ground on everything that's going on in your local community and state level. And even then, I mean, I know some business owners that have had to go to their municipality and lobby, whether it be the county level or city level, and try and lobby for their particular type of business to remain open. And some have been successful and some haven't. And so there's opportunities there as well.
Yeah, these are new times, but certainly you're 100% right that a lot of this is dictated by, third parties. A lot of it is driven by, it used to be that most of what we did restructuring was driven by the primary driver of restructuring was litigation. Businesses would come to us, lawyers would come to us because their client is being sued and they're on the eve of a judgment, or maybe they already have a judgment, they're on the eve of execution.
Right.
And now it's being driven by closures and municipalities, and the creditors are creditor litigation is not as much of a driver. The last consideration we have is consulting with professionals. It's people like us, restructuring advisors, lawyers. Most lawyers know what they don't know. And so you might be a business owner, may have a litigation lawyer or a real estate lawyer or corporate lawyer, but they really ought to bring in restructuring advisors who can consider really the options that are available, and with much of it being driven by what we've talked about today. But a lot of companies come to us and say, what should we do? And what do we always say? We ask them, what do you want to do? Do you want to shut this down? Do you have a tolerance for trying to make this work, or are you just done and you haven't slept in 6 months and you're done and you want to walk away and we can help you liquidate it? So, but consulting with professionals is really an important consideration.
Yeah, and the only thing I'll add to that is is the sooner the better. I mean, and I know, people really don't want to have to hire another lawyer, but if you bring in an advisor, again, whether it's a lawyer or another type of advisor that can help, the earlier that you get them involved, the more options may be on the table.
Right.
And so, if it's too late, like we always say, if we get the call and the house is on fire, there's stuff we can do, but it's limited.
Water.
Right. Put a hose, put some water on it. But the earlier that you do that, just like the earlier that you plan and look forward, that you can have some options, and you may end up a little bit better off. So, thank you for listening.
About planning.
All about planning. So, Jeff, run through the top 5, the list of 5 again, and
assess and preserve resources, prioritize creditors, negotiate forbearance, consider objectives, and consult with professionals. And professionals, by the way, is not just lawyers. There are accountants. There are also financial advisors who specialize in restructuring, and a lot of those, we refer a lot of those to our clients. And so sometimes a good operational restructuring advisor can be a perfect adjunct to a professional team.
Excellent. But thank you, Jeff.
Thank you, Brett. This has been informative and enjoyable.
As always. Bye, everybody.